Why is trading to some individuals just so boring when you can make unlimited or the sky's the limit type of money by just simply doing something just a few hours a day at your home? Okay. For me, I trade no more than 2 hours a day right here in front of my desktop computer. And then after that, I am done. I can shut down my computer because I'm only looking for 1 to 2 high probability setups. Okay. And today I'm going to just show you what I do, what the strategy and how I trade and what it entails. But there's a couple of things that really stand out that are critical to trading supply and demand. All right. There are so many other things in life that could be a whole lot more boring than simply making money, right? But the key to it all is really understanding the market flow or direction and trading with it. That's why I always stress, if you are a beginner trader, someone that's new, first and foremost, learn and master market structure. That way you can understand which way in the market you need to be trading, whether it is long or short. I always say trade in the direction of the market from your higher time frame or higher base charts, and do not trade against the grain. You can make money in this business simply by trading 2 hours a day, and that is it. You can go about after that enjoying the rest of your day, the rest of the week. Sometimes you really only need to trade 2 times a week, and you probably would have made more money simply from sitting in front of these charts only 2 hours a day, scalping, and being able to take the next 3 days off. So let's say you trade Monday and Tuesday, Wednesday, Thursday, and Friday. You made enough money on those 2 days where you don't have to work. Imagine having 3, 4, and 5 day weeks off. Okay. That's how it is sometimes. And that's the beauty about trading. I mean, you could come into these markets and make a couple $1,000s real quick and be done. Okay. You could actually do it just in 1 day's time and don't have to trade the rest of the week. So trading to me is by far the furthest from being boring. Okay. I love it. It's provided a great career and opportunity to be able to start a business, something that I can control, and I don't have to worry about a lot of people maybe working, for me or underneath me that I have to actually manage and making sure that they're doing what they need to do so that the business can grow. I am the business, so I have to make 100% effort in everything I do to make sure I can grow as a trader and continue to make money. The strategy is very simple. We'll take a look, just like, for example, here today and looking at today's trading session. So if I was first and foremost sitting in front of my charts, I trade range-based charts. Now, if you trade time-based charts, that is fine. I'm telling you right now, the two are not comparable. I'm not saying that you won't, find some means of a range bar chart that may be slightly similar to maybe a 5-minute or a 60-minute chart, but there's nothing going to be comparable because they too differ because one is based on calculation of time. The other is based on, volume and the amount of momentum that's coming into the market. So that's what range-based charts are centered around. Now, when it comes to the actual time periods in which I actually trade during the day, I'm looking for at no more than a max of spending 2 hours a day. I mean, sometimes I'll be done within 30 minutes, but typically speaking, pre-market, anytime really 7:30 to about 9 o'clock. If you can get your trading done or in that time, that's a good a good time frame to trade within, or shortly after the market opens up, the New York session, Eastern time, 9:30, Central, 8:30. Or if you're out on the West Coast, then that's probably a little bit earlier, 6:30 in the morning. But from there, 9:30 to about 11 o'clock, that's pushing it. So if I can, somewhere an hour, maybe pre-market hour, maybe during the New York session, just depends on, how soon I'm able to catch a setup, at least two trades. If I can get one and done, then I'm done. All right. So I don't spend a lot of time, and you can do this again, like I said, trading only 2 hours a day. If you're sitting here in front of the charts from 9 to 5, 8 to 5, just trying to left and right trade, eventually you're going to blow your accounts. And I say accounts, I mean multiple accounts, because you do not need to push the envelope, because you're going to start resorting to revenge trading, over trading, and so many other things. So one of the biggest obstacles that most traders need to really hurdle over is their own psychology and being able to control that, knowing when to shut things off, knowing when to walk away. Even if you had a bad trade or a losing day, walk away. Don't dig the hole deeper than it already is. All right. So the strategy is very easy. Whatever whatever higher base charts you use, start there. Okay. using top-down analysis, but get the structure of the market correct. So when I'm looking at the market from not yesterday, but Friday's close into the trading session today, all I see is highs, higher lows. I see a channel to the upside, which most of you should be able to, definitely see. I mean, you see this right here. We're moving to the upside. So that's what I'm looking for and what I'm looking at when I'm trading. So if the market is trailing to the upside, then I'm looking for opportunities to go long. Can you trade in a bullish to market? Can you trade going short? Yeah, I mean, you definitely can, but scalping real quick off your lower time frame chart. Don't be trying to hold anything too long, because the overall direction of the higher time frame is telling you, it's pointing you in the direction of what you need to trade, which is up to the upside, right? So when I see the market making higher highs and higher lows, then I'm looking for opportunities in which I could possibly go long at. That's why I had this demand zone marked up right here. But this was close to 10 o'clock, and we had, I think, PMI, manufacturing news at that time, and the market broke right through that area. Before and after that, it pushed back up to the upside here, and we broke this structure. So we were making these higher highs and higher lows to the upside, breaking structure. Now, there's basically two different ways you can, that I actually do it. It's like I like to start with, and always with my higher base chart, to see if I can mark up like a higher time frame zone first. But that I don't need for the market to always pull back to a higher time frame, nor do I need to sit here and wait, hours on end for the market to come back to a higher time frame. I could trade from my lower base chart, trading supply and demand to the upside. Okay, very, very easy trading futures. So if I mark up, say for example, this was a higher base demand zone right here, I could wait, for the market to come back there. But I could be waiting for a period of time, because when the market made this high right here, it came back around here probably about 15, 20 minutes later. That's not a lot of time, but sometimes it could take a lot longer than that, depending on how the market's moving. And again, at this time, we were getting ready to have major economic news, the PMI news. So we got a breaker structure here to the upside. So this could be a key area of demand resting right here. We broke this area structure this high, moving to the upside. Again, actually this one right here, this was a demand area right here, and that's why the market pushed to the upside right there. So now we have the market breaking more structure. There's another demand zone here to the upside. But I'm always paying attention to the left-hand side of my charts as well, because when the market starts taking out levels or areas of structure to the left-hand side, if we're moving higher and we're in a bullish market, then I'm always looking at, okay, where is a high point at? Maybe a major high where the market was reversed from, which is a major high resting right here. So we got, the push where the market was making lower lows and lower highs, reversing up here. We went from bullish to bearish, now back to bullish. So these levels in between on a leg is what I like to classify as minor areas of structure. And sometimes they could be major. Even you can have a major area of structure within a leg to where you have a major high resting up here. So this is a major high and a major low here. I guess in this video, I'm kind of breaking things down, give you and more so into like an instructional or educational type video, where we're just not talking about the strategy as a whole. Now the strategy, again, just simply I'm looking for using my higher time frame to gauge which way to actually trade. And I'm also looking to see if we're bullish, then I'm looking for high probabilities on higher time frame charts like my 120 to mark up a demand zone. Okay, right now, again, this was a breaker structure above right here where it came back. This was a high probability demand zone. Okay, so I would be interested and looking for an opportunity to go long off that area right there. Another one here, we have a demand zone here. If we got a pullback here, could be an opportunity. Be mindful where, say for example, where the market reverses from like bearish back to bullish, and you see where it's breaking structure multiple times, push to the upside, and then you look below and say, okay, yeah, it could come back here, but are there gaps that need to be filled back to areas of, say, demand below, or key areas or gaps that need to be filled back to the downside that need to be filled? Because the market could then want to kind of like start reversing right here and make a lower high to come back down and start filling lower areas. All right. Well, the market starts. So basically what I'm trying to say is the market starts getting too far away from where it transitioned or where it reversed from, and you have multiple breaks of structures where there are gaps resting back below. Be very careful, because they may want to kind of come back down to the downside to fill those areas and reverse. And it could be the inverse of if we're up here at the tops and it's starting to come back, down here at the bottoms, and then we're going from a bearish back to a bullish direction, reversing, they may want to come start filling some, some areas in. So anyways, so how it works is simply this: mark up a higher base chart first. Okay. All right. So if you have a zone that you could trade from, again, I think I talked about this area over here. This was a valid supply zone resting right here. Off this area here, breaking structure lower. We already reversed from the tops there. Valid here. Move down to your lower base chart. I'm going to start by marking up my 120 range chart, higher time frame, high probability zone here, and mark it up, and then I'm just going to scale down to whatever your entry chart is, whether it's a 5-minute chart, you trade time-based charts or range-based charts. I move down to the 24 range on the Nasdaq. I'll look to see, is there a high probability supply zone resting on the inside of this zone right here on the higher time frame or higher base zone, the 120. I'm looking for confluence. That's what I'm looking for. Okay. That is exactly what I'm looking for. But I also used and incorporate the volume profile into my trading, because the thing is that I like to see and take trades where I'm selling the highs of something, meaning the highs above a high volume area at a zone. Now, I'm not taking trades just, hey, the market's above a high volume area and then I'm looking to go short. No. First and foremost, structure. Secondly, the break of structure is important. Thirdly, is it a high probability zone? Fourth, I'm waiting for the market to come back and retrace to it on the higher time frame or higher base chart, and then I move down fifth to the lower base or lower time frame and scalping that way once the market taps into the higher time frame zone correctly first, and then I'm looking for, is there a lower chart, okay, or lower base or lower time frame supply zone in this case here to where I can go short from, that's on the inside of the higher base zone. Okay, confluence, having multi-chart confluence is what's important. Then I'll look over and see, okay, this setup right here is above a high volume node, pushing into a low volume area. So I'm going to sell the lows. To sell the highs here, going back down, because we have multi-chart confluence as well. That's what really is going to help you take good setups. Okay, surrounding supply and demand is where you have multiple means of confluence. All right, so let's look at some other opportunities. So let's say, for example, you don't have a zone within a zone. For example, like where you have the higher time frame, a higher base zone, and then you're waiting for a lower base zone to tap into or find a zone within. So this is a higher base zone, 120. I would be then looking for a 24 range on the inside of the zone, right? Now, if there isn't, you can definitely scout from a lower time frame chart and use, say, for example, just the 24 range chart or directly from a 5-minute chart, whatever it is that you trade from. But let me say this, you want to be trading in the direction of the higher time frame as well. So if the market is bullish, then I can be scalping the whole time. And let's say the market is bullish and it does not pull back to a higher time frame or higher base, high probability zone, okay? That doesn't mean I can't still look for an opportunity to go long off of my 24 range chart, my lower base chart, or my 5-minute chart, whatever it is you trade. It just works out better where you have the market pulling back first to a higher time frame or higher base, high probability zone first, because the higher charts are going to carry more weight than the lower base charts. Again, but you can still scalp in the direction of the higher time frame chart using the 24 range chart or a 5-minute chart, scalping directly from it, okay, without confluence from a higher time frame. Just keep in mind that those trades from a lower base chart, they're probably going to be shorter type scalps than it would be on a higher base chart. Like right here, well, let's say this was a high probability zone right here and it pulled back to a zone right here. Let's say, for example, this was a supply zone, right? Supply zone, high probability, taps into it. The trade is going to work out and last longer than something that's going to be where I'm looking to go short directly from my 24 range chart or just strictly from my lower base chart. The scalp needs to be very quick and very short. Get in, get out, that type of thing. Okay. Now, when it comes to today's trading session, just to show you as an example, we can see this was the reversal point of the market around about 10 o'clock, where it started pushing to the upside. You can see it here on the higher base charts. Where's it at? Right here. Okay. We were bullish, came down, bullish back to the upside, broke structure here, came back, broke more structure. But within this leg right here, from 458 down to 234, it's this leg right here. Okay. And you can see the reversal taking place on the 24 range. We were bearish here, back to bullish to the upside, breaking multiple areas of structure. Again, like I said, can you take trades directly from your 24 range chart? Yeah. As the market is breaking structure on the 24 range to the upside, like right here, when it came back right here, this was a demand zone right here. Okay. High probability off directly to 24 range. But you got to pay attention to price action as the market is retracing to, say, if this was, well, it is a demand zone on the 24 range. Lows, lower highs, lows. So we got supply areas. So if the market reacts off of a 24 range demand zone, okay, then you can only take it up to about maybe this area right here, because this would be a supply area right here. Okay, the market is going to, there's gaps that need to be filled or imbalances that need to be filled back to this area of supply, so it can definitely react right there. So these type trades where I'm looking right above where it taps into a demand zone, and I'm looking at price action as it's coming down to approach a demand zone, I'm not going to really take those, because of the fact is, and if I do, it's going to be very, very quick, just for a very quick couple of points, because I have something right here where the market can stop me. Okay. All right, and you got to know that, because the market's going to probably more likely reject or react to here and probably push lower. So here's an opportunity like right here. The market's making highs, higher lows, pushing to the upside. This is a beautiful area of what am I trying to say? Demand right here. Broke structure above these highs here, and it probably broke more structure to the left if I look here. Yeah, broke above these highs here. Valid pullback to a key area of demand. I'll take this one right here back to the upside, aiming for the highs up here to be taken out, and you can, then basically can trail in behind that. I've talked about how to trail behind price once you're into a trade. This is another beautiful quick scalp off of the 24 range chart directly. Market's reversing on the 24 from bearish back to bullish. High, higher low, breaking structure right here and right here. Pull back, aggressive area of demand. Take it back up towards the highs up here, okay? And that's what it does. All the way back up here to 383. Let's say you got in here at 368. You pick yourself up some nice points moving back to the upside, okay? From there, so what I'm just trying to show you is that you can definitely scalp using the 24 range without having, confluence or confirmation from the higher base chart, meaning a zone on the higher base chart. Because sometimes the market may not pull back to a higher time frame zone, and you're sitting there waiting for a need for it to tap into the higher time frame chart first, and then looking for that zone within the zone on a lower base chart. We may not happen. Sometimes the market may be just very bullish, and that's when we need to really be looking for trading in the direction of the higher time frame, but scalping in the same direction using our lower time frame charts, if that makes sense. Okay. All right. So here's a little demand setup right here. Push up, pull back, break structure, aggressive buying, comes right back to it. You could trade this right here. I would get in right here at 456 and I'll be definitely getting out somewhere in this area right here around 360, 362. I mean, if I was to trade this, but again, I'm not going to trade it because the fact is that if I look at this and I see, okay, the market's coming down, and we're actually breaking this area of structure. We have an area of resistance right here above us, okay? And there's supply right here. So I'm not going to trade that right back up to this area here, okay? Yeah, we got demand. We got structural breaks to the upside. This is a valid demand area, but we could be reversing to the downside, in which we are to the downside, coming back lower here. So when we start reversing on the 24, that's going to put us, counter trend to the direction of the higher time frame chart. We're bearish here, but we're bullish on the higher time frame. If I tell people who are beginner traders, don't trade counter trend, trade even when the market is bearish and the overall trend is bullish. Wait for it to start to form bullish direction back to the actual upside. Pushes up, pulls back. It broke this area structure, okay? So and it didn't come back to any area here, but then it made another high, higher low, pushing higher. This is low probability. Let's see here, low probability. Okay, but that's what I'm showing you, is that there were multiple areas of multiple opportunities, and you can still trade directly from the lower base chart without it even tapping into a higher, or waiting for a higher base zone to be tapped into first. So hopefully that makes sense. But that's how I trade supply and demand. Just 2 hours a day, being able to scalp and look for opportunities. And I'm only looking for 1 to 2 setups a day, and I'm done. Okay. Yep. Again, like I said, you can be sitting on your hands for a period of time. It may seem boring, and sometimes when you walk away, you miss great opportunities. But if you walk away and you don't catch a setup, it's better for you to have not traded at all and not lost anything, okay, versus you trading and forcing something and losing a whole lot, okay, if that makes sense. But I just want to share this video with you guys. Hopefully it makes sense surrounding supply and demand and how I do it. A lot of you already know because you're part of our part of the Discord for one, and a lot of you are the elite members. So if you're interested in becoming an elite member, what is that? That is a link down in the description portion of the video right below the Discord. The Discord is free. There's another link below that says Ultra Elite Supporter link. You click on that link, it's going to bring up 3 tiers. You probably, if you want to become an elite member, choose the last tier because you get the trade breakdowns. That's where, say for example, where I post trades over on our Discord, I'll go back to that private community, those who are elite members, and I'll break those trades down in deep detail so that you understand structure. Okay, what I was looking at, why I took that trade, stop loss, profit target, everything I was thinking about and why I took that trade in particular, and I break it down in a video. Okay, there's tons of those videos there, so you can join and become and watch those video content. It'll help you find setups just like the ones I take, just as well as it'll help you understand supply and demand as a whole. Because not only do you get the trade breakdowns, you get the video playlist, you get a great video that I cover surrounding market structure. You also get the live recorded trading sessions. Okay, something new that I just started doing where I'm recording my full length trading sessions with me trading. And outside of that, what else do you read? Oh, you receive the market recap videos just as well. That's where I go back. Most times I do it the next day in the morning before the session opens up, recapping what happened on the day, looking at structure, looking at opportunities that we could have taken that I didn't take. I don't trade the afternoon sessions, but I point out other opportunities as well. Just constantly looking at structure and looking at what took place during the session and breaking things down so that you can understand from a simplistic standpoint, letting you know in all that structure and how it is tied to everything in the way that I personally trade and how it's important to follow structure. Okay. But outside of that, if you're interested in becoming an elite member, the link is down in the description portion of the video. It's only pennies on $1 a day. It's very inexpensive, but it has helped so many people out. Outside of that, that's all I have, guys. If you haven't taken the time to sub or subscribe already, please make sure to click that button down below. Make sure to turn your post notifications on so you do not miss any of the uploaded content. And if you found the information on which I'm, addressing or discussing, or just bring it to the forefront on in this video, please make sure to click that thumbs up button and like button before you click off the video. I appreciate it. Take care. See you in the next one.